So markets are not cheap, markets are fairly valued, but markets are not terribly valued. And markets, when they peak out, Naren, it's a cycle. They will move to two extreme ends. So it is not like the COVID positioning, which I completely endorse, that markets are not cheap. There are no bargains in the market, but markets are not terribly expensive also. So when markets are fairly valued and when markets not terribly valued, what should one do?
See, markets are not terribly valued across the board, but markets are not terribly valued, particularly in mega cap and large cap. But slowly, markets are not fairly valued. They're slightly above fair value everywhere. And that is why the only approach which seems rational and which may be deemed too conservative is asset allocation, that you allocate money to equity, you allocate money to debt, you allocate money to commodities, and you allocate money to cash. That is the right approach at a time when almost all segments of the market are no longer fairly valued. They can be at least slightly above marginal value. There was a time, maybe 6 months down the line in the past, where mega caps appeared fairly valued. But as we speak at 23,400, it does appear that even mega caps are not fairly valued. They're slightly above fair value. And but still, mega caps are much more comfortable. Mega caps are more comfortable than large caps, over mid caps, over small caps, over micro caps. So the only approach that can work at this point of time is asset allocation. And that approach involves investing in all asset classes at this point of time. And that is the only approach possible, and an approach which allows you to participate in case that there are corrections. It gives you the opportunity to invest, and that is the only way forward at this point of time. And having said that, there are things people ask us: does it mean that India is not a structural story? That is not true. India is a very good structural story. I don't think there are structural stories like India today, where the banking system is in good shape, central government finances are in good shape, the central government stability is in good shape, you have continuity, and you have growth potential for the next 10 years, 20 years, 30 years. So it is not as if that the long-term outlook is bad. It is that, the valuation has gone above what we would want to see for new money. At the same time, we spend quite a lot of time trying to tell people, all the sensible people who have invested over the years till 2021 or 22. We told them, try to ensure that don't take out your money. Instead, enjoy the money profits that you have made, and do not make the mistake of taking out money, because the market is in such a shape that it doesn't look like markets are going to crash. So that is what we told people. It is that new money that you have to be more careful about, rather than the old money on which you have huge profits at this point of time.
If you like this video, then like, share and subscribe to ET Now.